Federal Reserve shifts to quarter-point rate rise, but warns of more to come. Fed slows rate hikes, signals further increases are coming. The Fed fights the Fed. And hey everyone, this is Chris. Welcome back to the channel. This is your daily news. So the Fed announced the expected 25 basis point rate hike. That's sort of what we all thought. And the market's like, yippee! I want to show you guys some numbers and some charts and share my thoughts with you and also get your thoughts as well. The first thing it's quite interesting is essentially the market is betting that the Fed is going to be cutting rates and cutting them deeply, essentially is sort of what the numbers seem to be indicating. It's strange though because the Fed doesn't seem to indicate that at all. So basically the market is saying, Fed, you're a bunch of liars and we don't believe you. This is really interesting too. If you look at the chart, sort of the history of where federal funds rates have been. So this is the 25 basis point increase. You guys can see this going up now in 2023. But in the past, right, in the 80s, it was like ludicrously high, like, 18%, something like that. And in the 2000s, you had it as high as 6. So, it's not like we haven't seen rates this high before, and we're raising them quite drastically. Now, one of the things that I think is important is, the exact language that the Fed is been saying, and I'll go over the exact language what they say. So we'll go read it together here. Federal officials made their 8th interest rate increase in a year on Wednesday, a quarter-point move as they continued their fight against rapid inflation. And while policymakers slowed the pace of adjustment, they signaled further rate moves to come. Quote, we're talking about a couple more rate hikes, Jerome H. Powell, the Fed chair, said in a news conference. So it's interesting because before there was a few articles that were coming out saying that the bet was that they were going to pause in May, but now he's using the words a couple. And this is sort of why, literally, he has to be very, very careful about what he says because we're all hanging on every word. Here's more from Jerome Powell. So he's saying here, inflation has eased somewhat, but remains elevated. Officials said in their statement, announcing the rate decision while reiterating that, quote, ongoing increases in the target range will be appropriate. So, they're not signaling that they're going to be cutting rates at all. And so the market's kind of betting that they are, but, who knows? I keep saying the market be crazy. But basically, like I said, they tend to not believe his words, but we'll see. It was more of it coming from Powell. Recent signs of slowing inflation were, quote, early stage, right? So saying, is inflation slowing or not? And he's saying, oh, it's at the early stage. He suggested that it would be bad to realize months from now that the central bank had not done enough to bring inflation under control. This is a quote. I just don't see us cutting rates this year, Mr. Powell said, defying forecasts from some investors. So, if I had to take a bet, I would just say, okay, the Fed is saying we're going to raise a couple more times. We're not going to cut this year. And so that means that we would have, high interest rates for the rest of 2023. And generally speaking, you always say, don't fight the Fed. So that usually would be a little bit tough for stocks to go crazy. Although, if you watch our markets, Bitcoin seems to be flying, and I saw Meta was flying. We'll talk about it towards the end here. But look at our sort of yearly chart on the S&P. Just a reminder, it's been up and down quite a bit. Just kind of at a glance, it looks like the S&P is going to hit a ceiling around, say, 4,200, just for example, depending on if we're going to continue this downward trend or not. We could stay flat. That would be a thing. But I just want you just to understand that this has happened before where things go up for like a couple months and they go down for a couple of months. So it's a stock market, and this particular year is volatile, which to me signals an unhealthy market. That's just my opinion on that. This is the NASDAQ. You guys can see the same kind of pattern as well. It's up, it's down. So, I guess some bulls are going to be saying, hey, everything's great and stuff like that. Or maybe some YouTube channels just jump on whatever bandwagon is on. I myself just try to give you the honest truth. I literally tell you what the Fed says. I'm showing you the charts for yourself. And, the best situation or the best, scenario for you, and I always say the same thing, is do what makes sense for you and manage risk, right? So, if you're a long-term investor and you don't need that money, right? Sure, you can do what you like, but I said manage risk. Like if you put all your money in the market like today and you need that money, I myself wouldn't advise that. You got to manage risk. What makes sense for you, especially with interest rates rising? There are other options out there, and that's sort of what happens. When interest rates go up, people have to decide, okay, where am I going to allocate money to what resources and what things. So like for example. Interest rates are going up, as we know. And this is interesting because the average credit card rate here was saying was like 19.9%. That's as of January 25th. So that's pretty high. So nearly 20% is the average rate for credit cards right now. And then I guess for new car loans, it's about 6.5%. They were saying mortgage rates now are going to be, what's this saying? So it was 7% in November, and I guess at the moment it's 6.13%. For mortgage. So that's according to Freddie Mac. So love to hear your guys' thoughts on this. And the reason why I'm breaking this stuff up is if you're, carrying a lot of debt and interest rates are going up, it's going to put a big strain on people. And again, we're watching employment numbers because what if you get fired in said situation, right? So, at the moment, U.S. household debt is at 16.5 trillion, which is really high. Because I want you to look at this chart. So this is basically what it was in say 2004. That's how far this chart goes back. And household debt was around 8 trillion. It is basically increased and hasn't stopped. Essentially, we are close to 16, and it's just basically setting all-time highs. It starts to add up after a while, especially when you're getting 20% interest rate on your credit card. And I was looking at this as well. This is a sort of like how much debt does the average person carry? Because we know that what the total aggregate is of U.S. households, but what about the say average person? So or I say house, I should say. So I guess the average, so the total for Americans is 16.51 trillion. That's for everyone together. But then total debt for a household tends to range about 165,000. That's what's saying here. Any type of debt is the average. And that's up about 7.5%, 7.65 to be exact. Credit cards. People saying here can carry around 17,000 in debt in their credit cards. Mortgages may be around 225,000. And they're dividing it between credit cards total and credit cards revolving. So that I'm not quite sure exactly. There might be like if you have multiple cards, that kind of thing would be my guess. Auto loan, the debt that people are carrying is about 28,000 or about 29, something like that. And then student loan is about 58. So you got to bring this stuff up, especially when you're talking about rising interest rates. I think it matters quite a bit. And I've said over and over again, especially for people who have a lot of variable interest rate stuff, you got to pay that stuff off because it's just going to keep going up. The Fed literally said we're raising rates a couple more times and we're not going to, be cutting this year. Well, that's what they say. So the market's betting something different. Now, when you ask people how they feel about debt, and they could answer more than once, so they can, it's not just a one or nothing. It's more than one. So anxious is the top feeling. That was 41% said that. Overwhelmed, 35%. Hopeful, 24%. And sad, 23%. And then proud and unconcerned was 14% and 12%. So not that many people. And some people are angry about it. So love to hear your thoughts. You can look at this chart for yourself. Which emotion, I guess, do you feel when you're thinking about debt? One of the things too that the Fed is looking at, I saw a couple of things of this. It was called supercore inflation. Remember, the Fed wants inflation, and that's typically measured by your PCE, to be at around 2%. The supercore inflation thing is related to just another way to read inflation and sort of putting more emphasis on the price of labor. So like, for example, services in USA, which USA is a big service economy, so like haircuts, that kind of thing, or how much does to hire a lawyer, something like that. Labor costs do remain elevated. And, basically workers want to get paid more. You've probably seen in the news, they're having crazy protests in the UK. The workers are saying, yo, pay me more. That's basically what it was all about. And some companies are like, you know what? We're not going to pay you more. In fact, we're going to fire you. And I do expect layoffs to continue. So this is sort of why I bring up, household debt, rising interest rates, these sort of thing. You look at something like Rivian, 6% of their employees are being let go, and this is like the second time they've fired people. You also can take a look at something like a DraftKings. They just announced today that they're firing. So it's 140 jobs, and it's 3.5% of the company. There was an interesting one as well, which you may not have heard. The PagerDuty CEO, that they were firing people as well, and she sent out an email that people were saying is basically tone deaf. And this has been a thing for unfortunately, many CEOs, they how can I say, are disconnected from the average worker, right? It's very difficult to become CEO, and sometimes you may grow a different life, be in a different life than say just your average person. And instead of using the word layoff, she was using the word like refinement. It's like, we're trying to refine our organization and that kind of thing. And people kind of were put off by that. And then she sent an email. Also, an email was like celebrating, promotions and how well the company's doing. And it's just like, it's kind of awkward to put in, an email that, hey, we're firing a bunch of people But hey, our company's doing great, and other people are getting promoted. Like, it kind of rubbed people the wrong way. And then sort of why this reached headlines is she quoted Martin Luther King in her email to employees that she is firing people. So the quote itself, like, it's innocuous. I mean, I'll read it. So it says, this is a quote. This is the email sent to employees that I'm firing you, basically. And she says, I am reminded in moments like this of something Martin Luther King said, that quote, the ultimate measure of a leader is not where they stand in the moments of comfort and convenience, but where they stand in times of challenge and controversy. So, like, the quote itself, there's nothing wrong with that, but the problem is that you're quoting someone who is, a civil rights leader, and you're equating, Martin Luther King's experience and experience of Black Americans to your experience as a CEO, and you're, like, in power firing people. So it's not really, like I said, the quote itself, there's nothing wrong with the quote itself, but it's the use of the quote is inappropriate to, put yourself in that position. So you're not in a civil rights struggle, you're firing people, and you're in a privileged position. So I hope you guys get why that's tone deaf. I think the biggest one, though, for me, the headline today, which is not the Fed, and I understand the Fed is a big headline, and this one won't be the biggest. Everyone will be talking about the Fed and stuff like that, is actually what's going on at FedEx. Read the headline. FedEx is laying off more than 10% of its management ranks. So what does that tell you? It tells you, I mean, you guys get this, that they're firing the better jobs, right? We've seen this before, and I remember reading something as well. I think it was both Google and Facebook were saying we just have, like, too many managers. And it's interesting because if you look at who's hiring, which we talked before on this channel as well, we know that Walmart is raising wages. We know that McDonald's is having a fight with the CEO because even, like, the legislature in California is saying, hey, you got to pay McDonald's workers, was it like $22 an hour or something like that, and now workers are going to go on strike. And then we know Chipotle is hiring. And so when I put all this stuff together, and I'm just letting you guys know my thinking, and I'm seeing that tech jobs and more well-paying jobs that they're laying off people. But if you want to work basically fast food and sort of be a lower wage worker, you can get that job. So I don't think unemployment necessarily tells the full story. Yes, people are going to be laying, there's going to be layoffs. There'll always be a job for USA if you're willing to work. That's my opinion. That's always been my opinion on that. I think there's always a job for you, but it may not necessarily be the job you want, and it may not necessarily pay enough to live in the area that you want, right? And someone mentioned before, and I thought it was a great comment, saying, like, if you take a look at, like, in some areas where if you work say 40 hours a week at say McDonald's, something like that, and you can't even afford to pay the rent in your area, there's a problem. There's a definite imbalance, and I completely agree with that. I think that is a decent measure. One of the things that's been a big change, and we talk about other comments, especially for people who are older would know this. So I'm pushing 50. I know I mentioned a lot of channel, but experience matters. When I was a kid, it was like a lot of teenagers worked in fast food places. That was sort of the thing that teenagers would do, especially my neighborhood, because I grew up in a poor neighborhood. These days, though, a lot of people use fast food, essentially these jobs, as like their full-time work, right? It wasn't necessarily always like that, is what I'm trying to say. And some of the people who are less feeling for workers, they'll just say, oh, well, you're not supposed to have a living wage is fast food anyway. That's just supposed to be a part-time thing, and that's just a temporary thing, or whatever. Like, that's not a permanent job. But the reality is, for many people, it is. And I think you're really discounting the experience of many Americans that's the only job available to them. So I mentioned this because I think it's a very important point. So management kind of jobs are firing at FedEx, but yet you can get a job at Chipotle. And what does that say about our U.S. economy? And they keep saying there's going to be a bigger divide between the rich and the poor, and the divide between the educated and uneducated keep getting bigger. And that's why I emphasize so much in this channel to keep upgrading your skills. Pay attention to what we talk about in the news all the time, because I want you to understand what's going on in the world, so you're not like, oh my God, I don't understand, and I'm angry and I'm shocked and I can't understand. This is sort of why we do this, to understand the trends of what's happening. Now, it's interesting, true story, after hours, Meta Facebook stock was like going up like crazy, like 17%, which is a lot for like a mega cap tech company. It's like, what the heck? And this one's been on a tear since November. For some of these stocks that were beaten down quite a bit, they've been just flying. So basically, it was interesting, and you got to kind of read into the details. So their revenue came in okay, but basically okay in terms of like what people were predicting. However, it says right here, revenue in the fourth quarter fell 4% from a year earlier, right? So it was interesting. And this is sort of why I try to remind you guys, is like, it all depends what people are expecting, what comes in, but is it actually good? The other thing too, which Meta announced, is they're going to be doing buybacks. So I think part of this sort of crazy run up could be the buybacks, and also so revenue didn't collapse, but revenue is not the same as total earnings. Hope you understand that. They are having an issue with costs. You can see here it says the company costs and expenses ballooned 22% year over year. So their costs really went up. But oftentimes, stocks move based on their future projections. So it looks like Meta Facebook is cutting back on their capital expenditures, right? So, how much money they're going to be spending on themselves and that sort of thing. They're going to cut it back a little bit. And this was actually, there was a letter, a couple letters actually, I remember reading, we read them before on this channel, basically saying, yo, Meta, like, we're big investors in your company. Like, what are you doing? You're effing it up for everyone. So, we'll see. They'll probably get this under control. And I mentioned this before for some of these companies, like, these big profitable companies, when they were really being down, I was saying, if you were going to take a bet, I would bet on one of those. At least they're making money. They're not going to go out of business. But there's an interesting thing that as well that was showing they actually won a lawsuit against the government, the FTC. I guess they're not a monopoly. So if you're following Google, which I think they report their earnings tomorrow, we'll see. But they may or may not be considered monopoly as well. But they may win because Meta Facebook won. So I think Google has a high chance of winning as well. So anyway, I'd love to hear your thoughts on any of these stories and sort of things that we're talking about, both in terms of interest rates, household debt, and what you think about sort of the notion of, FedEx is firing managers, but yet Chipotle is hiring. So thanks again for watching, everyone, and I'll catch you next video.